Hello and welcome as we continue the 2015 Union Budget dissecting exercise. We've got lots of interesting sectors to look forward to, but let's focus on tax and economy. These are two critical areas that have been discussed. A lot has been said, but there are some fine print issues which are now coming up, which would be interesting to understand and of course interesting to delve into. Joining me to do all of that for economy is Saugata Bhattacharya here, Chief Economist of Axis Bank, Uday Ved, tax expert, and also Harshvardhan Roongta of Roongta Securities, who's going to take us through some of the personal finance tax issues, which are also something that you should be aware of and perhaps be interested in. Gentlemen, thank you very much for joining us. So before I quickly go into some of the specifics, let me get a sense of what you gentlemen took away from the whole exercise today, given the fact that there was a certain run-up to it and an expectation. Saugata, why don't you go off?
I thought it was a very thoughtful budget. I think within the constraints of the fiscal restrictions that the finance minister, the government was operating under.
Okay.
Particularly after, the tax revenues are not growing. On top of that, there's a huge leakage now with transfers to the states. So the amount of things that they could have done within themselves, I think they have squeezed the most out of the
So when you say
revenues.
thoughtful, do you mean that it was careful or it was well planned?
I think you're right, that this is both careful as well as well planned.
Right.
They know what they're doing in the budget. What are the key areas that they need to spend their scarce resources on, and I think they have seemed to have accomplished whatever goal they have started on.
And you felt that there was a train of thought which was running through the whole
I think this budget is very much part of a larger scheme of things that the government has shown,
right,
that it is trying to do to put in place some radical changes in the way business and the economy is run in the country.
Right, and I'm going to come back and pick your brains a little more on that. Uday, quick takeaway?
No, I think it is a very well thought through, as Saugata was saying, but I would say it is a bold budget. And for the first time, a finance minister has looked into a path. Generally, a finance minister would look at year-on-year tax collection exercise, and that's an end of the discussion. Here there is a path which has been given, say, for next 3 or 4 or 5 years, balance 4 years of the current government. How will the economy move? So there is already a path. Corporates can plan, individuals can plan, foreigners can plan, and I think clearly it's a growth-oriented budget.
How much of it is correcting in the tax context, correcting past mistakes or problems of the past, and how much of it did you see as a clear step towards the future?
Clearly a correction from some of the past, and in terms of, say, indirect transfer, which has created so much of a confidence gap issue in the past. Just one amendment, retrospective amendment, which happened in 2012. That was a case of one company, Vodafone, and that has created so much confidence gap. That part is proposed to be, bridged it. Not fully, I would say,
yeah,
but certainly there is a case.
Right.
In terms of the path over a 4-year period, for the first time, a finance minister said, this is how the corporate tax rates will move from 30 to 25%. Again, there is a path. Okay. Again,
and this is how exemptions could go as well.
Exemptions could go away. Yeah. So it's maybe it becomes more simple.
Yeah.
Then I think it's nothing new. In the past, there have been tax laws, committees which have suggested this. However, for the first time, it seems to be implemented.
Right. Okay.
Towards implementation.
Right. Harsh, how did you take away, and what are the particular or specific implications for the individual taxpayer?
Well, if I look at, we've seen two budgets in the last 9 months. So if you see the first budget that the finance minister presented, it was more from the individual taxpayer's point of view, wherein the basic exemption limit was increased, the investment limit under ATC was increased by another 50,000. Then we had the interest on housing loan. That limit was also increased to 2 lakh of rupees. Now this particular budget was more, if I would put it, they were concentrating on just two aspects. One is the Make in India campaign, and the other is Swachh Bharat. So everything revolved, if you see, around the Make in India campaign, wherein there was thrust on infrastructure, the spending on infrastructure. There was some clarity in tax laws. There was assurances given to the people sitting outside India that if you come into India, we're proposing to give you a very clear tax,
right,
the outlook on our tax regime. When you look at Swachh Bharat, there is a specific provision made under 80G,
yes,
wherein the donations and the contributions made for Swachh Bharat Kosh would be 100% exempt under 80G. So the whole idea is, I think this budget was more ignoring the individual taxpayer, in my opinion, and more concentrating on the broader economic reforms.
Right.
So to say.
But you don't think that raising the exemption level has going to have much impact, is it?
Well, I would prefer if we would talk about things that are undone in this budget. I'm sure, keeping in mind the inflationary pressures on individuals today, there is a huge demand. I mean, there is a need, rather, I would say, to increase the money in the hands of the individuals, because this would, in short, turn around the spending cycle, and which will again go back to the industries. So there is a need, but as we say, what's the takeaway in this budget? I would say it is primarily focusing on just two campaigns.
Right. So you're saying even the 4,40,000 limit is not good enough? Or?
No, most certainly not, with the simple reason there has been an increase in service tax from 12.36% to 14. Now, if you see, the result of which is going to be far-reaching. There is a service tax issue levied on your telephone bills. There is a service tax issue levied on your food bills when you go out dining. So everything, service tax is going to be affected and rather levied on every service that you're going to take. Wherein the exemptions that have been given are just too little to compensate for that kind of expense.
Oh, okay. You're saying that even though the exemptions could have at least optically seem to have gone up by several thousands, it's not going to offset what you will pay by increased
Most
service
certainly
tax.
not.
At least for a normal middle class
Most certainly
household.
not. Most certainly not.
Most certainly not. So which means it could actually, the service tax, it could be higher.
Absolutely.
Okay. So we'll come back to that as well. So Shogata, let me begin with you. The other big theme of this budget was obviously public investment, right? Public investment as the driver of growth,
Right.
public investment in terms of the government taking the reins again. And also, if we were to start with the railways and draw the arc, so to speak, we land at an interesting place. Walk us through that.
I think that's a very important point that you made. I mean, in terms of the continuity that you mentioned, and my colleagues mentioned about the clarity and the stability of tax regimes. You saw that in the railway budget, as you pointed out, that they're trying to draw in a whole bunch of finances outside. This was pretty much the first time that there was not a random increase in the number of trains and so on. So again, that was a very well thought process. I mean, they're looking at data, trying to figure out how to rationalize routes, trying to squeeze the maximum amount of the assets that the railways have, which is pretty much the same thing that you have seen. If you look at the finances in terms of the capex and revenue expenditures this time are growing at just about 3%. Of course, I mean, a part of that is due to the transfer to the states, as opposed to something like 10-12% last year, that was budgeted last year. Capex spends are increasing at 26%, as opposed to about 19-20% that was budgeted last year. Budgeted, of course, that hasn't moved in. So I think even from within the squeezed parts, they are spending more. They're trying to leverage private investments through the limited resources that the government has. The National Investment and Infrastructure Fund, the Mudra, the Small Enterprises, Micro Enterprises Fund. So all of that is beginning to move in. They're beginning to encourage entrepreneurship, which is something that
the number of times the word startups was used in the speech.
That's right. So I mean, he doesn't just want jobs; he wants jobs to be created by people. I think the entire tone of the budget was empowering people in some way, moving the systems to pricing, rational pricing, market pricing, and protecting, because I mean in this environment there's supposed to be a lot, invariably going to be a lot of uncertainty and volatility in the system. So to protect the lower income households, the lower income families from the effects of these uncertainties, they have also put in place a lot of safe social security nets, insurance, pensions, etc., accident insurance, etc. So I mean, the overall sense is that you guys who are able to, you move ahead on your own, will help to the extent that you can. Some people will not. I mean, the old, the elderly, and again, I mean, that's one theme that's peppered throughout the budgets. We'll take care of these guys, and there's going to be some cross subsidy that the government is going
Right. So let me ask you about public investment in the context of fiscal deficit, right? So you've been discussing that, and I mean, you've been in some other debates on this as well. Could the government have spent even more than this? Is this enough? At, of course, the risk of seeing a higher fiscal deficit, but then gaining in terms of higher public investment, which in turn might trigger higher private investment.
Right. I think that's a very, very important question. Could it have spent higher? I mean, could they have cut back even more on some other revenue expenditure items, say subsidies, which haven't gone down all that much, although we don't really understand whether that's due to the proposed payment of the arrears that still remain on the subsidy payments. Could they have done a little bit more on cutting down the revenue deficit? I think this is pretty much about a balance. I mean, you could have again taken capex expenditures up, taken the fiscal deficit up to about 4.1, 4.2. On the other hand, you could have taken it down to 3.5, 3.6. I think this is a via media middle path that they've tried to put in the amount of money that is required as the core equity of larger funds which they can leverage, rather than putting a huge amount of money in themselves, which is the philosophy of the railways budget that you also saw as well. So you do a lot of enabling financing,
Right.
and wait for the private sector to come in and do the rest of the financing.
Right. So, Uday, let's look at the corporate sector now. Tax rates are obviously going down. On the tax front in general, right? So the finance minister actually began by saying that, we do not want an adversarial tax regime anymore. Now, I don't know if this has been said in as many words before, but are you getting a sense that perhaps things will improve as when it comes to the relationship between the tax man and the taxpayer?
No, certainly. I would say, in fact, why only on the budget day, but some actions which have happened in last few months in terms of government deciding not to appeal against the order of Vodafone and Shell, which happened on transfer pricing, where the issue was a mere issue of a fresh capital, is it subject to tax, and there was a transfer pricing, and based on the opinion of the Attorney General, the government decided not to appeal, and in fact given a direction to not fight such cases. So I think certainly a non-adversarial tax regime, more stable, certainty, consistency, very, very important. We want to tax it, let people know about it. I think that path has been done, and some of the actions in the budget also lead towards that.
Are you getting a sense that we are trying to or moving towards expanding the tax base, raising more tax from more places than perhaps the same people?
Expanding, there are two aspects. Expanding the tax base is more important today for individuals, and I think the more and more you change the slab rates and increase the exemption limit, in fact you are taking the people out of the tax net. So that is one part on the individual side. So there is a conflict, inherent conflict. From a corporate perspective, all companies pay tax till today at the flat rate of 30%. Now for the first time he is given a path from 30, whether you are a listed company or a non-listed company. So 30 will become 25 over a 4-year period. Of course he's not going to change it this year. So maybe he's saying over a 4-year period, but starting from April 116. And so that's again a path. He'll suitably has to make the maths work, right? And so saying incentives and some of the exemptions will go away, which is good from a corporate perspective, which is good. Where life becomes more simple. One more thing which said, because there are companies in SEZ as an example today, which are paying the minimum alternate tax, MAT, which is 18, now 20%. Now will they go to 25? That is a question which is being raised. As it stands today, is not changed anything on the MAT. So the way it looks like, unless it changes next year, that 30 will go to 25. If you are a MAT paying company, your rate will still be 20%. Because I think somewhere the average corporate tax rate contributions today is about 23%.
Right.
If you look at 30 versus...
Yeah, and which is why you could actually see tax rates going up, isn't it?
Yes,
Yeah.
yes.
So, so should companies be happy with this, or?
I would think so. In fact, 30%
because the clarity is the...
Yeah, 30% is a very, very competitive tax rate. In fact, India is a tax haven, in my view.
Yeah.
If you look at parts of Europe, you look at France, you look at Germany, it's upwards of 50-60%. Look at USA, it is 40%.
Yeah.
There are also federal taxes, there are state taxes. You have one federal tax system. So I think 30% is a very, very competitive tax rate. If you, unless you just remove countries like Singapore or Hong Kong, if you look at that, and China, this China model. China, it went from 30 to 25, right? And we are in fact moving towards that. If you want to compare yourself with China, then at least on that front, on a tax rate front,
and the finance minister did talk about incoming investment and the need to harmonize and create a sort of attractive proposition. Harsh, I was looking at a sea voter study, right? A survey which was done after the budget, and it asked the question: will the budget push up monthly expenses? Right, so 60% felt that the budget will push up monthly expenses. Now, this may be at the sort of off the cuff reaction, on the spur of the moment, and so on. There was also a question asked that will prices come down after the budget? 52% said no. Only 31% said little bit. Right. So this was a sea voter, 2,000 plus respondents, which was done today. What's the sense you're getting? I mean, where is then the common man likely to sort of have more consumption expenditure? If at all, in this sort of budget, or if at all relating to the budget?
See, well, Govind, it's a very interesting situation that we are in. At one end, we're talking about increasing the tax base, so that more people come into the net. The only way of doing that is to charge on consumption. So that is indirect tax. So the moment you move towards an aggressive indirect tax regime, you will have everybody virtually paying tax to the government, because irrespective of the income that you're in, if you're buying an X product, you're paying service tax. You're taking service, you're paying service tax. You're buying a good, you're paying sales tax.
Right.
Right. So that is the indirect tax is the way forward. It simplifies the direct tax regime. Now, on the other hand, if you look at the provisions and the outcome of the survey, we've seen the exemptions that have been given. There has been only two forms of exemptions which have been really given to the individual. One is if he's an employee and he gets a travel allowance from his employer. So from an 800 rupees, it has gone to 1600 rupees. So that is some bit of money, if at all, left in the hand of the individual. The other is actually linked to spending.
Yeah.
Which is your...
Yeah, and I might add that this survey was done before the petrol and diesel prices were hiked, right, at 3 rupees each.
So that hasn't been incorporated in the survey anyways.
I'm guessing people would have reacted. Yeah.
So now look at the exemption, that the limit that has been increased under Section 80D, which is the premium that you pay for mediclaim mediclaim policies. Now that has been increased from 15,000 to 25,000. So let's just analyze this one particular data. If you have saved another 10,000 rupees, and if you fall under the 10% tax bracket, you've saved 1,500 rupees as tax.
Right.
Against which, if you look at the impact of 1.64% increase in the service tax, and your exemption, the consumption and your expenses are say about 5 lakh of rupees. So your expense has now gone up to about 7,500 rupees. So while you have saved 1,500 in the additional benefits, there 1.64% additional service tax that you pay on your total consumption is about 7,500.
So it sounds to me like people should be demanding a rollback of service tax.
If not rollback of service tax, because see, rolling back of service tax is very largely linked to the introduction of GST.
Yeah. I mean, also because there's a discrepancy between this and your excise, isn't it?
Absolutely. Now the whole idea is that you definitely need to, you should have, I would say that the finance minister should have looked at increasing the tax slabs, or rather increasing even the investment limit under Section 80C. So these would have at least motivated and pushed some kind of money into investments. Now let's look at the infrastructure bonds that were announced, the tax-free infrastructure bonds. Now this is the investment that you make in these bonds are not going to be eligible for deduction under Section 80C. Just the interest that you earn on those bonds will be tax exempt. So had you made some provision of say 50,000 rupees under Section 80C to say the investments into the bonds would also qualify for tax deductions, it would have been a great impetus to even the infrastructure funds.
Right. But does that provision exist for any other kinds of bonds?
No, not as of now. Everything collectively, it's an aggregate. The Section 80C is a cumulative of a couple of investments that you can make.
Yeah.
And there is no separate provision. Earlier, we had those infrastructure bonds equivalent to about 20,000 rupees that you could invest into and then you could claim tax benefits. But that has not been introduced again in this.
Okay. So let's take a step back again. Yeah, go ahead. Uday.
One point to what Harsh said. From an individual perspective, one of the key aspects is housing today. And I think that has been touched in the budget today, saying some 6 crore houses by 2020 or so. And if you look at when you go for a 1-bedroom house flat today, it may be cost 60-70 lakhs. And a 10% simple interest will cost you about 6 lakh of interest, which everyone, a common man, is paying. Today the exemption of interest on borrowed house is 1,50,000, put some 5-7 years back. And I think there's a demand for that to increase. Right? You are anyway spending that money. So 1.5 could have gone up to maybe 3 lakhs or something more. That would have put more money. You are anyway spending that money. You would have put the money back in the
you're saying if you set such ambitious housing targets, incentivize people to
incentivize that. That's why there's one reason why real estate sector was hoping that this will go through. And that didn't come through.
Okay, so let's take a step back again and come back to Shagota. Growth, investment and jobs. These are the three sort of the triumvirate of objective when it comes to union budget in a growth economy like India. Where would you sort of place us in each of these buckets?
Place us meaning the budget
or as a country. I'm saying where do we stand now? I mean growth, investment and jobs.
Growth.
And where does the budget take us?
To the extent that
which numbers?
With the new numbers, we are the fastest growing large economy in the world. Okay. And the finance minister talks about moving to a double-digit level.
Yeah.
So nobody even comes close. China is now ranking a poor second, with 7% growth. In terms of jobs, I think that's one of the key areas that we need to focus on. We haven't added jobs at all. Manufacturing has done very, very poorly over the past decade. Overall jobs have not been scarce. Jobs have been scarce. Agriculture has not, there's no capacity for adding jobs. So we need to move them from rural areas to urban areas. I think jobs we have not done well. I think this is where the budget is trying to move things forward, both from a manufacturing as well as probably from an agricultural side as well. Increasing productivity in agriculture, the value chain of agricultural items and so on.
I mean, many economists also have argued that perhaps it's just not possible to create those kind of manufacturing jobs today. And therefore, maybe we need to look at new models.
So, I mean, that's an important part. I mean, one part, of course, is skilling. So, you need to have people who are, we were talking about textiles. Apparently, our cost advantages, cost competitiveness of textiles is still very, very high. And there are order flows that can come into India. But companies can't scale up. One, they don't have land. Second, they don't have skilled labor to scale up their production lines. So I think skilling is a very, very important part. They are also trying to move to encourage people to set up their own businesses, the micro units, the SMEs, the MSMEs. I mean, they're trying to push those because that might create jobs. There are problems even in there. The incentive structures for subsidies for SMEs, I'm told, is so distorted that companies do not have the incentive to move beyond 10 employees or whatever.
Yeah.
I mean, they will tend to set up 10 factories and then lose out on the scale. These are things that they need to worry about. Driving both of these are investments. So that's the key thing that ties together pretty much everything. So you need to expand capacities. You need to do that in a low-cost manner. You need to have funds to do that. I think that's another area that we are not doing all that much better in terms of our emerging market peers. But the unfortunate fact is, as of now, we still have an enormous amount of unutilized excess capacity. So I'm not very sure whether I think growth can come up very much.
Yeah, and one estimate I got today was that it would take at least 18 months or so for us to just catch up with the capacity that's already there in the system.
I would tend to believe that.
Yeah. So therefore, and then we talk about adding more capacity and so on. Okay, so let's look forward now, right? So the union budget was presented. A few things may roll forward or roll back depending on who makes the most noise or and so on. Yeah. But let's look at what the bigger challenges are for the economy in general and for the country in specific. So let me start with you, Harsh. If we were to sort of take a step back, go back a few months, and then say, okay, here are the sort of larger issues that are facing the country, whether at the individual consumption level, larger investment level, public, private, overall growth, investment, jobs. What are the sort of challenges and the unfinished agenda still ahead of us?
See, well, Govind, if you're looking at growth, it surely has to come from manufacturing, it has to come from capacity expansion. Now, over there, the challenges that are being faced over there are definitely the ease of doing business. Now, there is so much of administration, there are adverse, there is, I would still say there is an inspector Raj and the license Raj. So there has to be some standardized formats wherein the discretion of the officers is taken away. So which I believe now the budget has tried to address. The second issue is about the labor, the availability. Now, at one end, we're talking about jobs not being created. On the other hand, if you talk to industries, they would say they do not have the requisite skilled labor available.
Right.
So there is clearly two different views coming out. But there has to be some mechanism which bridges this. Now, apparently, I'm sure there is the National Skill Development Mission. There has been the employment exchange. So all of these have been trying to work towards getting the right kind of labor force to the industry.
Right.
But there still seems to be that disconnect.
Okay.
So there needs to be something very on a very specific note made over there.
Right. Uday, your unfinished agenda? If you were to cast your eyes over a slightly larger or a longer time frame.
Yes. I think from a pure tax policy perspective, I don't think there are many expectations that people have. It's more the administration of the tax policies, how the tax department has run in the past. A huge amount of litigation which has happened. As an example, India accounts for global 70% plus of transfer pricing litigation in volume terms. Right? India is single largest. And that has created so much. But
does the increase of threshold in the budget help that?
That's for the domestic transfer pricing. Okay. Yes, certainly. I think it's a move towards bringing simplifying.
But you think 70% of
70% of global litigation on transfer pricing in volume terms is emanating from India.
Okay.
Single largest contributor.
Right.
And India is 10-year-old in terms of international transfer pricing.
Right.
And the audits have happened in last 5 years. So I'm saying this.
So everything
we are talking is last 5 years.
Taxmen have worked the hardest in the last 5 years.
They really worked hard. Paper demand. I think it has never been implemented. 95% of the appeals have gone in taxpayers' favor at the tribunal level.
Right.
So
okay. So that's one.
So that's one part. So that part is getting addressed to an extent in terms of easing the administration. I gave an example of Vodafone. The other major change which has happened in this budget, good change, has gone, maybe it has gone unnoticed. In terms of there are appeals on a particular issue that a taxpayer has, and the taxpayer has won at a high court level. Revenue has filed an appeal to the Supreme Court. Now this is a common issue. So on a year-on-year basis, this is the first year where you need to know what will happen at the Supreme Court. And this year on year, this issue keeps on coming. What is happening till today, the tax department will file appeal every year. Multiple appeal in terms of time, cost,
Right.
everything. Now for the first time, budget gives an option to the commissioner to decide if he thinks okay, then he can direct the assessing officer to say, don't file an appeal, just file a letter to the tax tribunal.
And this means what?
It says that, look, if at all, this issue was to go in favor of taxpayer at the Supreme Court level, that's an. If it was to go against and revenue was to win, then this option gives a right to the tax department to further appeal. So you are consolidating all the appeals together. Look at the amount of time, effort, money, everything which would have been spent more from the revenue side as well as from the
And
taxpayer
it's sort
side.
of, and there seems to be a common thread, right? The removal of wealth tax, for instance,
Yes,
seems to be
absolutely.
driven by the same philosophy.
Absolutely, absolutely. The same philosophy, a wealth tax accounts for less than 1,000 crores. And the 2% cess possibly is going to account for 7,000-8,000 crores.
Right,
Much
9,000
larger than that,
according to the
right?
finance
And I think
minister.
it's everybody knows it for a
Right.
long time.
Okay, last word, Saugata, as we run out of time. The unfinished agenda, if you were to look at things over a slightly longer time frame.
Ease of doing business easily ranks amongst the
Number one,
top level, and they're doing it outside
What
the
about the
budget with
social side?
all the process improvements that they're doing. I would think the financial, I mean, I have to say that coming in from a bank, financial markets, I think that needs to be liberalized. I think more players need to come into the markets.
We saw a few
And
steps.
Absolutely. Steps, and we have seen other actions as well. The new banks that are coming in, new licenses, new payments structures that are coming in,
Right.
etc. I think that's one area that we need to become more globalized. The Gift City is moving in that direction, and I think the Reserve Bank is also trying internationalization of the rupee. I think this will make available pools of global capital to come in and fund our massive investment needs.
Okay, and in terms of going ahead, I mean, is there anything else that you feel is sort of pending and needs urgent attention before we go?
I would think that, I mean, the input markets, I mean, particularly, I'm not so worried about labor. I think we are de facto quite rational in our labor markets, flexible. I think land has become an issue. I think that needs to be looked at very carefully. Taxes and other issues, there are so many of these. But land, I think, needs to be looked at very carefully in terms of enabling.
But broadly, I think we would conclude by saying that if I would sort of understood you, if I have understood you all right, I think we are directionally fine. There are a lot of small good things in the budget. There are still obviously larger issues that are pending which need to be looked at, and of course it might help if the service tax was sort of pulled back a little bit, if otherwise it might offset everything that we've sort of gained elsewhere. Right, so we've run out of time. Thank you very much, gentlemen. We go in for a break. On the other side, we look at some sectors a little more carefully, manufacturing, financial services, and then we try and understand what are the things that the budget has done and not done, and similarly try and create an unfinished agenda which is a little larger and looks at a longer time frame. Thank you very much for watching.